So we've talked about this, so maybe we'll have a little discussion here. What are some of the types of fraud, scams, mistakes that a business needs to protect against? We've mentioned several of these just through the course of the different accounting topics we covered, but name some that you remember. Yeah, Scott. Embezzlement, okay. Embezzlement, okay. What does that mean? Okay, it's related to someone stealing the company's funds, right? You're kind of taking the company's assets and siphoning them off for you individually. Okay, yeah. So that could be done by an employee. Embezzlement usually implies an insider doing this. Okay, yeah. Did you have is it Rin? Rin, right? Yeah. Was that theft? Yeah. So we talked about theft. Uh, by your customers or third parties, but also theft from employees, which is kind of covered under this embezzlement thing. What else? Yeah, exactly. Yeah, so that's an example of someone who had access to the accounting system, uh, manipulating it to, basically pay himself from the company's money. So yeah, that's like definitely a good detailed like what someone did, but that would count as embezzlement. It's like taking of the company's assets. Yeah, so misstatement. So we talked about shrinkage, for example, right? That could be from mistakes in the accounting system. It could be from theft, damage. So that was like could be a mistake. It could be a fraud or a scam. Um, so yeah, we talked about a lot of these. Uh, Theft, employees scamming, right? We talked about, I think we mentioned how you could mess with the timesheets. There's different ways your employees could scam you. Your company has assets, equipment that could be misplaced or stolen. Um, we talked a lot about inventory, right? What is in inventory? What is the value of the inventory? So these are areas of kind of sensitivity where mistakes or fraud could happen. And then credit sales. Okay, this is one maybe um, we touched on where if you're selling things and extending credit, meaning the customer is not paying you the cash right away, right? That's it's essentially giving loans, right? So if you're giving loans to customers who are not going to pay you, or making sales to fake customers, maybe that's like a fraud or a scam. That's an area of fraud, or mistake or loss for your business. Okay, so obviously a business needs to do stuff to prevent all this. We agree? Like this is all bad for us, right? If there even mistakes, which are potentially not anyone's like intentional misdoing, but we want to prevent mistakes and misstatements. Okay, so a business is going to implement certain things, which we call internal controls, to basically protect themselves and their business against this. Okay, so these are systems that are put into place and they're related to the operations of the business. And again, they're really to protect against fraud, embezzlement, and scams. So this is external parties, embezzlement and scams from internal parties, such as employees, executives. You want to prevent waste and loss. So again, even if there's no scam involved, like if you're not keeping track of the company's laptops, for example, they just get lost. You have to keep buying more. So you want to control waste and loss. That's also an expense for your business. Okay, so you want to have systems in place to manage that. And then, of course, mistakes and errors, because that can be costly for your business too. So, what do they promote? You want to make sure your assets are safeguarded. Okay, so you want to make sure that your physical assets are protected. You want to make sure your financial assets, like your cash in your bank account, can't get easily stolen or misplaced or unaccounted for. Um, you want to promote operational efficiencies. This kind of is related to these two. So these two are related. Waste and loss are going to obviously make your business less efficient. And same thing with misstatement or errors. And of course, accuracy. Okay, so when in the end, you want to be able to not only report accurate information to your third parties that are reading your financial statements, but also if you're the manager of a business, you want to have an accurate sense of what's happening in your business. And if you have a bunch of inaccuracies and misstatements and errors, you're not going to even have a good sense of what's going on in your business. Okay, so um, you're going to have to set up things within your business to kind of control for all this stuff.